Thanks for joining me for the popularity contest. I like to look at the most actively traded stocks on the day and give you my live analysis of the stocks, where they can go to, what I see in them. I'm not talking about the news. I'm talking about simply the charts, simply the volume, simply the demand. That's what I see. That's what I do best. And that's what I simplify for you. Okay, let's talk about this one because this is kind of a meme stock. NAOV, NAOV. Now, I mentioned this is a meme stock because these traders, let's just go up the 3-month chart. Yep, that's what I thought. All of a sudden, from no activity in before July, I mean, almost dead activity before July. Let's bring that up. Bum, bum, bum. Nothing huge selling in November of last year. So it was kind of dead on its way down from $1.58 all the way down to 80 cents, I guess, 75 cents. People thought it was a good move. They started talking about it. They pushed this stock up all the way north of $3. Okay. Keep in mind, this is the 1-year chart. So let's condense it a little because we can still use the 3-month chart and include everything that we're seeing. Because what you need to see for this stock to move is inflow, which you can kind of see today. Okay. So yesterday, or let's say Friday, it had 1.8 million. Day before, 1.7, 2 million. So it does about 2 million on the day. Let's say on its good days. Okay. Today, we've got to be, what, 11 million. So we're only at 9:45. We're 15 minutes into the market. So yes, this stock is trading. Let's just go to the 1-day chart because it tells you this stock is in play today. What I mean by in play, I mean huge sell-offs. So there were huge bag holders here. You really have to watch the volume here. Let's go to the 5-day because what you can see, I mean, obviously the stock can pop anywhere. I'd say north of 177 would be pretty dangerous. So I wouldn't be into this stock. In fact, here's how I would play this stock. If you want to play this stock and you look, every time it spikes, and usually this spike is a 1-day spike. Let's go here. It lasted 2 days. Here was a 2-day spike. It went sell off. It was a 1-day spike, then outflow. So the spikes in this stock, and again, the stock symbol is NAOV, which is up 18%. I think it was up much higher earlier. Yeah, I mean, it was up to $2.20, and right now it's at $2.02. So how I would play the stock, I would watch it today. I wouldn't touch it today. In fact, I hope it goes up today. Let's say it finishes at 230. I'm watching it tomorrow because I just spoke about it only goes up for 1 or 2 days at a time. And then as high as it goes up, you'll see it come down. That's history, and history tends to repeat itself. So when I talk about things like that, I'm looking at the stock, $2.05, moving up. Okay, so again, I'm looking for it to close here or wherever it closes. Let's look at the 3-month. Again, let's just put this on the screen. What I'm telling you is when the stock spikes like it's doing today, the next day is a sell-off. Spike, sell off with greater volume. So whatever the volume is today, and let's just put a guesstimate in that we get 50 or 60 million in volume, which would be huge for this. Say it spikes to $2.40 or 50 cents. I'm looking to either short the stock or to buy puts. Now, I'm not looking to kill it. What I tell you guys is secure profit. So if I'm looking to short the stock, and let's say I get in at 250 or 240, I'm probably going to go for about 16 to 18%, maybe 20%. I mean, I might get in at 240 and go down. It depends how close I get to calling the ceiling. All right, now we know the ceiling is, I mean, the stock's gone as high as 295, 308, 337, 289. So if it gets 245, 250, 260, again, that's when I'm comfortable shorting it because that's been the ceiling already. We've seen it a couple times. Now, if I'm incorrect, let's say I start shorting it at $2.60 and it breaks out and goes to 320. What do? I wait for it to settle and then I double my short position. The same way you would average down. If you bought a stock that went to 10, right? You bought the stock at 10, it goes to 8, and you say to yourself, I'll buy double the amount of shares. That way my average is 9. So it's the same thought process, light bulb moment. On the way down, you want to do the same thing if you're shorting a stock. Okay. With options, I talk about a different strategy. You'll have to read my option rules. But with options, I don't average down unless my option is down 40%. I just wanted to add that in because if you're interested, I have an options video. I have other videos. So hopefully I explained that stock and what I'm looking for. Let's look for another active stock today. One that I've mentioned before. Okay, here we go. FAMI's moving up. So let's bear with me. FAMI, F-A-M-I. Let me see if I can pull this up and then I'll add it on here. FAMI. Okay, So FAMI did an offering a while back and the stock went, let me just see, to get my numbers right. Yeah, it was over like 50 cents. They did an offering, took the stock like south of like 18 cents, I believe, at some point. Let's see, 20 cents maybe. Okay, so it seems 20 cents was the lowest. So let's look at the 3-month. Okay, now here's the good thing. All right. When I see something like this, and I call this a crater, when I see a crater, it tells me it's like a gap. It tends to get filled. So I've seen it in different stocks. I've mentioned it and we've profited off it because usually the crater gets filled in like 1, 2, or 3 trading days. Let me see how long it took here. That's the year chart. So I'm not really focusing on anything before June of last year. So I'm actually going to go to 3-month chart. So here's the crater. You can see it. And it actually took, we had those bad market days. So it sold off and you had about 5, 6 trading days. And then it spiked because everybody knows that it's going to come right back to this level. And then there was a sell-off. So actually, I never really liked this stock, but I might actually be a buyer of this stock. It's at 34. Let's just check out the 1-month chart. Let's see what demand's like. All right, so it's showing me that there is demand and inflow right here, 929, 930. Then when you have the sell-off of the 3 terrible days that we had, and every stock showing that, it's showing the same 3 days, 10-1, 10-4, 10-5. Then you have a little inflow, but not enough to make the stock go up, which is good because as people are buying, the people that have weak or paper hands are unloading. So people are buying, there's inflow, but the stock price is going down. That's great. So there's outflow. Of course, the stock price is going to go down. And again, you're seeing that today. So I wouldn't be jumping in today. It's down, what, 4%. Here we go. It's at 34.12. So let's go to the 5-day and the 1-day. So yeah, I'm not going to hop on right here because I'm catching a falling knife. You could see something like this. It could fall, get, and then fall again. So yeah, I'm watching to see if it hits maybe like 32.2 cents. So FAMI is now on my watch list, FAMI. I'm going to be a buyer somewhere right around here, 32 cents flat, okay? If I get 32 cents, what am I going to look for? Well, I'm going to look for a bounce back to this range right here, probably a little higher, 35 cents. So if I'm in at 32, I'm going to look for 10%. That's how to execute a scalp. You have a strategy. I'm not buying in at 34 cents saying I'm going to make 10%. No, I'm saying if this stock declines to 32 cents today, that's when I'm in. And as soon as I execute my buy, I'm going to get out at 35 cents. I don't need to ride it up to 40. I'm not greedy. You give me 10%, say I put in 20,000, $2,000. That's it. Risk, reward. I've got limited downside. So if I buy at 32, let's just work with me right here. Here's 32. The limited downside is maybe like what? 31.5 cents. I actually might pay a little more than 32. I might go 32.2. Point is, limited downside. That's what I teach you. Limit your risk, maximum rewards. If I'm correct, and let's say it spikes and I'm still holding it, it goes to 40, even though I wanted to sell at 35, say I get it at 32, I would sell at 35. But say it spikes overnight or after hours where I don't trade. I'll take 40 cents the next day. I would gladly make an extra 13%. If I'm going for 10% and I can make 23%, more power to me. Pay me. You know what I'm saying? All right, let's look at one more stock. Let's see what's popular. Oh, Camber Energy. So let me pull that one up. That's CEI. Now, Camber had a short report. I've mentioned this stock before. So let's just pull up the 3-month. Let's get a look at it, okay? You had internet gurus on Twitter, famous on YouTube, Mr. Zach Morris. You probably had some other cronies as well talking about the stock, putting a price target of $10. Now, what do? They find a stock that has low market capital, that has low number of floating shares. So I think this one might have had, let me look it up. Market cap was 400 million right now. So it was probably a market cap of a third of that, maybe 100 million. Shares outstanding, 249 million shares. So at 50 cents, if you have 125 million, you could literally double the value of the company. That's why they manipulate stocks like that. I don't know if anybody ever told you guys. They look for low float, low market cap. I mean, I've seen some companies that have 6 million, 8 million shares outstanding. If somebody wants to get a little manipulative with those, they can do some damage and have some fun. All right, so let's look at CEI. We're looking at the 3-month chart. That's what I like to look at first. You see, okay, so they pushed it up here. Then what happened? There was a short report, and the short report pushed the stock from $2 down to 90 cents. Now, I get in on the way down at $1.36, but I already sold it at $1.53. So I'm no longer in the stock. I sold it the next day on this big inflow day because I knew that shorts don't give up. You see inflow day and they're like, yeah, we beat them already. The inflow's up, green, volume, demand here. And let's look at the 1 month just so we can look at it a little better. Here it is. And you're like, we beat those shorts. It's only going back to $3. But no, I say take profit. Next day's outflow. And then let's look at the 5-day chart. All right, so you take profit. Next day's outflow. You're down here. If you want to buy back in at like, oh, wow, it dropped to 92. I was going to say, if you want to buy back in at like $1, okay. But here we go. They pushed it up to 224. That's your selling price right here. Anywhere in here, over 2.25. Let's look at the 1-day chart. Again, opens at like what, $1.80, $1.70. If you're in that stock and you're reading the chart like I am, telling you you're selling at 2, you're selling at 2.25, you're selling. Now, where are the buy points? Because that's where we might be closer to right now. The stock's at what? Stock is at $1.64. Okay, so you're at $1.64 right now, which is right around here. I wouldn't be buying it. $1.64 is right here. The last time we were here, you had 1, 2, 3 out of 4 selling days. So shorts are still probably here. They're still probably trying to force the stock down. I would do my due diligence. You look up Fintel, FINTEL.com. You look up the short report for CEI. Now, what you want to see is people buying back their shares, the shares that they borrowed to short the stock and force it down. Now, when you force the stock down, you flood the market. So you're like, I'll borrow 50 million shares. And you say, I sell 50 million shares as it's sliding down at $1, $1.05, guys, it's going down. That's how you short or push a stock down. Supply and demand, you oversupply. Okay, the same is true. If you're shorting the stock, you have to buy it back to return the shares that you borrowed, like you borrowed them from the bank. So you have to buy them back. So shares could have been bought back this day. I would be very cautious about this stock. I'll tell you where it's going. I wouldn't actually be buying this stock. I'd be selling it. I would be buying it in this range right here, $1.20. And I would do exactly what I did. I would sell it up in the $1.60 range. So CEI, my strategy, buy at $1.22, sell at $1.60. Now, what do you need to execute? First of all, you need to listen and you need patience. Patience, it's on your watch list. The alert goes off. It's at $1.20. You look at it on that day. You're like, oh, here it is, $1.20. No, it can go down lower. Oh, here's a good point. I'll buy it here. Whatever it is, you're looking for the dip. Just because your alert goes off and tells you it's at $1.20 doesn't mean you buy it at that point. You buy it, you look at the chart, then you go, okay, limited downside, better potential. Matt said if I'm in at $1.20, I can get $1.60. That's 33%. So keep this one on your watch list. And I appreciate you guys joining me for the most active stocks this morning.